Welcome to Finbot Insights. Today, we're deconstructing ARK Invest's high-conviction, high-stakes bet on the future, a strategy built entirely on disruptive innovation. We're going to dive into their thesis and see what it means for investors looking for growth.
So to really get what ARK is doing, you have to start with their core concept, disruptive innovation. Now, this isn't just about making a slightly better product. We're talking about a fundamental shift that creates entirely new markets, often making the old leaders totally obsolete.
And this quote really gets to the heart of their big idea. What they're saying is that this isn't just another tech cycle. They believe we're living through a historic transformation, one that will redefine whole industries and unlock trillions of dollars in market value.
All right, here's how we're going to break it all down for you. First, we'll lay out ARK's core thesis. Then, we'll explore the 5 specific innovation platforms they're betting on. After that, we'll zoom in on their data-driven projections for 2025. Then, we'll see how this big-picture theory actually translates into a portfolio. And finally, we'll cover the very real risks and give you the final takeaway.
Let's begin with the main argument, which is all about rethinking where true, long-term growth is going to come from in this new economic era. Think about it this way. Traditional investing often focuses on the established, old-school giants, the companies that pay a steady dividend. It's a value-based approach. ARK's strategy is the polar opposite. It deliberately hunts for the high-growth disruptors, the companies that are using new technology to potentially deliver exponential, not linear, returns.
Now, this entire thesis doesn't just rest on one big idea. It's built on 5 distinct pillars, 5 technological platforms that ARK believes are working together to reshape our world.
They've identified exactly 5 massive, general-purpose technologies that they see as the primary engines of this new economic wave. These are the foundations upon which they believe future growth will be built.
And here they are: artificial intelligence, autonomous technology and robotics, the Genomic Revolution, digital assets and fintech, and finally, space exploration and defense. These 5 platforms represent the entire playbook for ARK's investment strategy.
But here's the crucial part. It's not just about these platforms existing in their own silos. The real magic, according to ARK, happens when they begin to overlap and merge. This is what they call convergence. It's the idea that when these technologies combine, they create something exponentially more powerful than just the sum of their parts.
And this isn't just a theory. They're tracking it with data. The network density, basically a measure of how interconnected these platforms are becoming, has increased by a staggering 30% in the last year alone. This convergence isn't just happening, it's accelerating. Okay, that's the theory. But let's move on to the hard numbers. Let's examine some of the specific data points that ARK is using to support its projections for the very near future.
In autonomous technology, for example, they project a complete collapse in the cost of transportation. They're forecasting a price of just 20 cents per mile for a Robotaxi service. I mean, think about that. That doesn't just make your taxi ride cheaper, it completely upends the entire economic model of car ownership.
Or take a look at digital assets. This isn't some distant dream. As this chart shows, the annual transaction value of stablecoins on the blockchain has already surpassed that of the entire Visa network. Let that sink in. The new system is already processing more value than one of the biggest incumbents of the old system.
Then there's the Genomic Revolution, which, when you add AI into the mix, is set to completely change the economics of drug development. We're talking about costs potentially dropping by 75%, from $2.4 billion down to $600 million, while cutting the development timeline in half.
And what's making this possible? An absolutely mind-bending drop in the cost of the underlying technology. The cost of DNA sequencing has fallen by a factor of 10 billion over the last 35 years. That rate of progress completely blows past Moore's Law, which was a long-standing benchmark for technological advancement.
So the ideas are compelling, and the data is eye-opening. But how does an investor actually get exposure to these themes? Let's turn to how this framework gets put into practice.
ARK offers access through its lineup of actively managed exchange-traded funds, or ETFs. Each fund is specifically designed to target these innovation pillars. Their flagship fund, ARKK, gives you broad exposure across the board. But you can also choose more focused funds, like ARKG for genomics or ARKQ for robotics and space, allowing you to fine-tune your investment.
Now, we have to be perfectly clear. Any investment thesis of this magnitude, one that is so focused on the future, comes with very significant risks that have to be taken seriously.
First, investors have to be prepared for extreme price volatility. These assets can have wild swings. Second, there's always the risk of unforeseen regulatory changes that could slow things down. Third, you're betting on specific companies to succeed, and many new ventures simply fail to execute. And finally, these rosy projections assume that technology adoption will be smooth and fast, which, as we know, is rarely the case.
After running through the thesis, the data, and the risks, it all comes down to one final question. What's the bottom line for an investor considering this high-conviction strategy?
Ultimately, the thesis posits that in an era of such rapid change, the biggest risk isn't betting on innovation and being wrong. The biggest risk is ignoring it, sticking with the status quo, and potentially missing out on the next industrial revolution altogether.
If you found this deconstruction valuable, please hit that like button and subscribe to FinBot Insights for more data-driven analysis of the forces shaping our financial future.
And it is imperative that you remember this presentation is for informational purposes only. It does not constitute financial advice. You should not trust me or any other social media influencer. You must always conduct your own thorough research before making any investment decisions.